Hey everybody, Boris, Forex. Welcome to the COM dollars for April 9th to April 13th of 2018 for Aussie dollar, dollar CAD, and Kiwi dollar. And the story in the COM dollar land, of course, is just, I think, quietude. There are some interesting side stories that are developing that are very much worth watching, especially with the Aussie dollar. I'll get to them in just one second. But basically, as far as volatility goes, we're pretty much at the levels we've been for the past month. It's a 76.50, 78 in Aussie dollar. It's a 72 to 73, very narrow range in the Kiwi. And the only one that's kind of moved is dollar CAD, no surprise here, but it's moved to the downside with 128, 127, although you could really say 126 could be the next support level as you go forward. There's nothing much on the calendar this week. We just had the Canadian employment data. That was pretty good, and that helped the CAD to go to dollar CAD to go to the downside. But as far as commodity data, what business manufacturing PMI out of New Zealand, and that's it. I mean, there's just literally nothing. There's a couple of speeches by RBA personnel next week, and that's about it. There's nothing on the calendar here in commodity land, neither in Canada, nor in Australia, nor in New Zealand. But what is interesting, I think, is the following. So when you go back to the COM dollars, of course, they're central to this whole trade tariff story. Canada has just been wrestling with the whole NAFTA story, but also very much part of the broader sentiment of trade wars. In other words, if the Trump administration comes in one day and they're mad at the world, the dollar Canada really tends to react very, very sensitively to that dynamic. What's interesting now, though, however, is because we've escalated the fight with China, it's Australia that's starting to feel the heat of the trade war rhetoric, because of course Australia is the primary beneficiary of global trade flows, and especially the trade flows through China and out of China. So if for some reason China is capitated, for some reason if Chinese economic existence is threatened by the US in one way or another, it really has a big spillover effect into Australia. So whenever you see escalation of trade tensions, Aussie now becomes kind of an interesting proxy trade in the currency wars, and very much worth watching as we go forward. It's definitely been a relative weakness performer this whole week. Let's take a look at the charts here and just see how things are going. So here's dollar Canada, which has really been the most volatile of all the trades. And I think the most interesting thing about dollar Canada as we close out the week, even though dollar Canada closes out the week on a green candle because we have risk off flows, the broad general theme here is lower, lower, lower. We topped out at around 132 here, and we've been distributing very, very strongly all the way down. And so far, you're seeing a series of lower highs, still continuing the downtrend, still very much in the sell zone. And it looks to be like we could certainly move towards the 126 level over the next couple of days. This is especially true, I think, if the market feels a little bit better about risk, if the trade rhetoric is toned down a little bit. All of those things would really help dollar Canada. In addition to which, by the way, nobody's noticed, but oil is almost at 70, and that certainly provides a big tailwind for Canada. So even though we don't have a lot of event risk, data was very positive. The market just simply needs to feel more comfortable with risk, and you could certainly see dollar Canada drift all the way down to 126 as the week progresses. Now, Kiwi is the of course, much tighter, calmer, low volatility trade, but has traded surprisingly well. And if you look at it technically here, one of the interesting things that's kind of shaping up here that's almost a subtle, very, very nuanced trend is the uptrend in Kiwi. You have a series of higher lows here. And if Kiwi comes in this week and takes out 73.50, it's really starting to challenge that upper end of that range, which means we could really be testing the much higher levels here at the 74s. Overall, Kiwi looks to be like a really interesting trade. In this day, when the market is down, when risk flows are off, for Kiwi to essentially end up unchanged on this buy-up candle, very bullish sign and worth watching. There's nothing fundamental here that you can explain it with, which means that that's probably a really good reason. That means if you can't find a reason, there is a lot of buyers here. And the fact that they've bought this up tells me this is one of the more interesting possible signals we have coming into next week. And Aussie, which I have to just type up because I don't have it on my chart here, is actually a relative weakness trade. You see how Aussie is really feeling the brunt of the move from China. As a matter of fact, sort of the easiest way to express the whole Chinese trade war angst is, ironically enough, through the Aussie-Kiwi cross, with the Kiwi providing a massive amount of relative strength against the Aussie. So we'll take a look at that in the crosses. But for Aussie itself, it's kind of scraping the bottom. This very, very important 76.50 support level is key. And it'll be interesting to see if we get a response from China that escalates the situation next week, that sort of says, okay, you slap 100 billion on us, we're going to slap 100 billion on you. We're going to maybe cut off completely all agricultural imports, so on and so forth. If you get those type of situations happening, Aussie breaks 76.50. That's a very, very important level. And we could be seeing 76 very quickly after that. So I'll be watching that for a potential trade if we get further weakness out of as a result of Chinese tension. I generally think that's a pretty decent trade to make. And you can either try to look at it at Aussie, or you can look at Aussie Kiwi on a relative weakness basis, because the Kiwi is certainly showing a lot of relative strength as we go forward. So that's kind of how the commodities shape up. They're not necessarily a story in and of themselves, but they are the primary victims of a lot of fight between U.S. and China, and therefore provide some interesting opportunities for trade expression. Wish you guys the best luck, the best trading. Boris, over and out.